I want us to do something very special. I want to start a series that says this is what I do. Open my forex charts. I believe this strategy is the best strategy that I'm going to do it in a series, from one step to another one, until we all of us understand this strategy. I believe if you do it several times and then you combine with other strategies like support and resistance, yeah, and many other strategies, you'll be able to secure some profit in the market. Now I want to do this in a series, and this will be our episode 1. I want it not to be long. I don't want it to be long. I want it to be short, like I just want it to be I take around 10 minutes each episode, so that it can be easy for all of us to learn. Another thing, I want to make it so easy. I don't believe in asking people for payment for me to teach them. I believe it is good when you teach others, you master your art even effectively. And I don't think I will ever ask for any payment to teach anything concerning Forex. Whatever I know, I'll teach, because I believe everyone deserves something, and that is what exactly I'm going to do. Now let's get into the video. Now, of late, when I enter the market, I open my monthly time frame. I check the directional bias on the monthly time frame, and then I go to directional bias on the weekly time frame. On the weekly time frame, where is it trying to? On the daily time frame, where is the direction of the market? And then I will go to the 4 hour. When I go to the 4 hour, I mark my structures effectively, and then I look for. My strategy is always the same. I don't trade support and resistance, supply and demand, but it is good to know some key areas of support and demand. But when I enter the market, the first thing I check, when I go to the monthly time frame, I mark where liquidity was swept, and then I mark the valid break of structures. Now let me tell you this: we have valid break of structures, we have valid sweep of liquidity, we have valid pullbacks, we have valid change of characters, valid order blocks. We have invalid and valid point of interests. So you need to differentiate the two. Now let me simplify this thing in the simplest way possible. I want to know the trend of the market. Just take seconds on the trend of the market. For example, in this chart that you are seeing here, what are you seeing? Yeah, in this chart that you are seeing here, what are you observing? For me, it only takes less than 3 seconds to see the market of the market. Look at this. The market is going down, up, down, yeah. It is making lower lows and lower highs. It is on a downtrend, right? But I want to simplify it more further for you to understand what is happening. Now look at this. I want you to look at this. I believe, let me show you something. If there are break of structures, when the price is breaking structures, I want to see the market taking liquidity before breaking structures. Look at this. The market went down, went up, but it never took any structure on this side. As you can see, no structures that were taken on this side, right? There were no structures that were taken on this side, and then the market came, break structure here. But I consider this as this structure here that was broken. It was an invalid break of structure. I waited until the market reversed. The market reversed upwards, took this liquidity. The market reversed, took this liquidity. Even if it could have taken this liquidity on this level, it is still okay, so long as liquidity. If the market breaks structure and it never took liquidity, that point where that high it left if it is a downtrend, that becomes our liquidity. For the sake, for example, minute, let me remove this. For example, look at this. Look at this. There is a break of structure at this point, right? But this break of structure never took any liquidity above here. No liquidity. I'm not seeing a clear liquidity that was taken. So this one becomes our liquidity. This point becomes our liquidity, and any point above it. So if it takes this first point, then this is our liquidity. But if it decides to go for this further liquidity, that's still okay. And then the market came to break structures at this point. This is the valid break of structure. This point where the market broke structure, this is the valid break of structure. Understand? This is the valid break of structure. Now I as my valid break of structure. That is what I'm just doing. Now after this market took this structure, it went down and then it came back. When it has taken liquidity above here, all I'm looking for is now when it has taken liquidity and broke structure, I just come at this point somewhere here. I check for an order block, a valid order block. In that case, that is where I wait for the market to return to, and then I take my trades. Now let me show you something. I want to show you something here. Sorry for this. Now look at this. Look at this. The market, there's a valid order block point. Sorry for this moment. Sorry for this, just a moment, then we'll continue. Just a moment and then we'll continue. My phone is... Yes, let's continue. Now I was saying, let me confirm if it is recording now. I was saying, after the price takes liquidity, just a moment, this thing. Now I'm saying this. After the price takes liquidity above this point, I will not wait for the market to come above and take another liquidity above this point. I will not wait for the market to come and take liquidity above this point. I will not wait. I'll just mark the order block, the valid order block at this point, which is this one. I believe you can see this order block at that point, and then I'll wait for the price to come, right? So I'll just wait for the price to come back into this order block, right? And then I look to sell to the downside. Sorry for this. And then I look to sell to the downside to this point where the market started retracing from, just like that. Actually, that is everything I do. So on the monthly time frame, we are on a downtrend, unless if the market breaks above this high that took liquidity. My strong eye that will be broken for me to say this is a change of character is this eye that took liquidity. Are you seeing this eye that took liquidity? Let me show you. This high that took liquidity, this high is my if the price goes above this point, then that will be my change of character. Then now I'll be starting looking to buy, but still for now the price is still downwards. It is going down, so I'm looking for sales, just like that. It is very simple like that. Then this is my directional bias on the monthly time frame. Full stop. That is everything. I've known that my monthly time frame is saying that we should be bearish. We should looking for sales. Always looking for sales. check for a valid break of structure that has swept liquidity. That is the valid break of structure. Mark its order block. Wait for the price to retrace to that point. Check for a change of character after it touches the, I'm saying, after the market left an order block at this point, then it retraced to that order block. Now I look for a change of character at this point, and then I look to do what? To sell, just like that. I look to sell. I'll sell to this point downwards, yeah. But you should take partials, profits partially as the market goes down, because as you can see, the market went down. The market went down, and then it reached this point. It started retracing back to the upside, right? And then the market started retracing back to the upside, but I believe it is reacting from an order block at this point, and then the market will resume to go downside to break this structure, right? That is exactly what we should do on the monthly, and then we go to the weekly. We do the same thing. We check for the direction of bias on the weekly time frame. What is it saying, but putting in mind what is happening on the monthly time frame. Just like that, check the directional bias on the monthly time frame. Check the valid structures. Don't use invalid structures. And then go to the weekly time frame. Check for the directional bias on the weekly time frame. Know where the market is heading. When I know where the market is heading, I will utilize that movement. That is what we should be doing. And then on the weekly time frame, put in mind what is happening on the monthly time frame. You go to the weekly, check the direction of bias, but don't forget what is happening on the monthly, the key levels on the monthly. And then go to the daily. Daily now is where you simplify the structures. You look for entries. You go to the 4 hour. I usually use my 15 minutes time frame and 5 minutes time frame to enter for trades. But I must know the directional bias. This is the very important thing you should know. Once you know the directional bias, you can't miss. So this is episode 1, and then now we'll go to the weekly time frame in our episode 2, and then in our episode 3 we'll go to the daily time frame, and then we'll try to look for entries, right? Just like that. So let me see you in the next episode, you guys. Don't forget to subscribe, don't forget to like, don't forget to also share this video. I also want to see people learning from this content. I'll be so happy seeing people benefit from this very content. Otherwise, may God bless you.